Hello traders and welcome to another video review. Today is Friday, December 27th, 2024. Let's find out what's going on the economic calendar for today. Asian session included the release of the Japanese data, jobs applications ratio, Tokyo core CPI, which is lower than expected, 2.5%. Tokyo CPI excluding food and energy, industrial production, and retail sales. This is a very mixed bag of data with different actually medium important data releases from Japan. We are still waiting for the data from the US. These data are goods trade balance and retail investments, HPI composite, which are scheduled for release at 2:30. Then we got the data from the oil industry. Crude oil inventories are scheduled for release at 5 o'clock together with the Cushing crude oil inventories. And then we got the speculative net positions from the futures market. So not very busy day for today. Crude oil inventories is the major data that we are waiting for release, because it might just simply move the market. It might trigger some bigger volatility. And how it looks like right now, let's take a look at the technical part. We start with euro dollar. As you can see, we're still waiting for the bigger volatility after the Christmas period. So far, the market of the euro dollar on an hourly time frame is still locked. Let me just extend this line. There you go. It's still locked between this level indicated just at the beginning of the trading week, 1.0386 and basically 1.04. 26 local swing high 1.0431, 5 pips higher, but big upper shadow preventing the market to move above this level, above the trend line towards the 1.0453. Momentum is right now neutral. We used to go to the extremely overbought levels. Overbought conditions were automatically rejected and the market moved towards the level of 50. Please notice that on the hourly time frame, movement from the extremely overbought conditions to the level of 50, the neutral level, is exactly 1.0431, let's say 1.0412. It's 20 pips, not even 20 pips. So very limited range here. We're waiting for a breakout on euro dollar. Because we speak about the crude oil inventories, let's just switch to the 4-hour chart of the crude oil. As you can see, this market has been moving inside of the trading range for quite some time. Let's mark some levels, because this might limited, let's say, trading conditions might trigger some sort of the volatility. Volatility might be bigger these days. The liquidity is quite poor, so we might see the volatility to increase. So the major technical support in the short term is 66.60 per barrel, and the major technical resistance is 71.40. Now, this level has been rejected on December 16th. Then we got movement to the upside once again. We almost hit the technical resistance. There you go. And then we got another movement once again. So we got 3 big nice rallies towards the technical resistance. All failed. Right, so it means that there is bullish pressure on the crude oil to break to the upside, but despite this effort, there is no result. It means that every another attempt to rally might be made on the lower momentum, lower volume, and it might happen anytime now, and the result will be basically as it is right now, the rejection. So once the bulls are tired of trying, the bears will come and will easily smash the prices lower, because what's the point for the bulls, right? Local technical supports 69.33, 70.72. This nice movement to the downside, which is apparently almost the same as the previous one, might indicate a very nice one-to-one correction, with the momentum coming off the level of 60 down to the level of 45 and a half, basically. Moving averages are almost in line, 50 and 100 moving averages on the 4-hour chart. So right now there is not much going on. On the crude oil chart, there is not much of a breakout, neither to the upside to the downside, as the market expects the data release. Maybe the data release will trigger some movement. Right now there is a visible bearish pressure on the market that resulted in a rejection of the level of 71 and 29 and 71 and 49. So this zone will be the supply zone, and if the market will fail to rally above the zone again, maybe the patience of the bulls will be it will be too much for the bulls, and the patience will run out, so the market might reverse even below the local technical support at 68.45 down towards 66.61 technical support. So please keep an eye on this market. Moreover, in a medium term, daily, and basically on a daily time frame chart, this market is now sideways, so it's kind of a trendless market. Because of the Japanese data, let's take a look at the US dollar to the Japanese dollar, and here we are with a continuation of a breakout. We broke above this last swing high at 156.76. So let me change this color from red to green because it's technical support right now. Local high is 158.09. So the market can rally back again towards upper channel line and towards the level of 161.96, right? But on the 4-hour chart, the market conditions are extremely overbought already. We have a slight bearish divergence right now on this daily time frame chart. Please notice this is a daily time frame chart. So maybe, just maybe, we might see some sort of the pullback, preferably towards this technical support, while the momentum will come off the extremely overbought conditions, and then the market will be ready to rally. And the next target for the bulls is obvious, is the swing high at 161.96. There is no indication of the end of this movement to the upside, of exhaustion of this upside movement. There's no indication of the reversal. Bulls are in charge of this market. After the hefty correction here inside of the channel, market was ready to move higher. It moved higher by breaking the short-term trend line resistance, then back above 153.29 technical resistance, took off the swing high at 156.76, and now it's heading towards the 162 level. So if we speak about these markets, let's take a look at the Bitcoin. It might be quite interesting to take a look at this market, because on the this is a weekly, I wanted 4-hour chart. Yes, because this market is not doing much. However, it still moves inside of our range and according to the plan. Why I'm saying according to the plan? Right now this wave B is getting more complex and time consuming. We have the Batman sign here on the RSI. We have the slide Batman here, if you can see it, of course, on the market, on the chart as well. That's what I wanted to say, on the chart. And all-time high has been marked, wave A to the downside. This might be wave B, counter trend internal correction. However, the market decided, due to the poor liquidity, to move a little bit higher inside of this range. And as you can see, the market actually went up twice. First local high 99,486, second local high 99,950. So the liquidity zone was established, technical resistance was strong, and the market reversed lower. We are back in the, let's say, middle of this local range. Wave B is now A, B, 1, 2, 3, 4, 5. Beautiful ABC correction, irregular flat, and now the market is ready to move lower to continue the wave C towards lows of the wave A, which is 92,277, and preferably even lower, back towards one of these levels, roughly around the level of $90,000. Momentum is negative already, liquidity is poor, let's say the volatility is right now, low, because it's still early, it's the end of the year, so please don't expect big swing on any of the market, unless there is plenty of traders who are actually taking the profits off the table, or losses. It depends. However, this scenario, ABC to the downside as the big corrective cycle, is still valid, and we are still waiting for this wave C to materialize sooner or later for the Bitcoin. When this correction is done, is completed, then the market is ready to continue the uptrend, basically, because the long-term uptrend and mid-term uptrend and even the short-term uptrend is still the short-term outlook is still up, the trend is still up, but in the very, very short time frame, as it is, for example, 4-hour time frame or hourly time frame, the outlook is still a little bit bearish because of the downside correction, ABC downside correction. We're waiting for the wave C to be developed soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.